Hi there, good afternoon. This is Your Stocks, a show where we answer all your stock and investment related queries. I'm Mangla Malu. With me is Sumaira Abdi. But before we get started with the show and answering your stock queries, in our efforts to stay safe, we've disinfected our studio and gadgets before the start of the show. We urge you to do the same as well and take precautions. Well, it's earnings, so we get a handle of Mastek. The stock is trading higher after reporting a stellar set in the fourth quarter. In fact, whichever way you look at it, revenue growth, net profit, as well as as the EBITDA margins, we saw a big jump out there. We have the management joining us. John Owen, who's the CEO of Mastek, joins us on the line. Thanks a lot, John, for joining in. Now, if you could tell us, a little about your revenue growth itself. The growth came in on account of your acquired company, Evosys, which did about 87 odd crore rupees for 2 months. What's the outlook for Evosys for this year?
Well, I think it's both parts of the organisation. Both the historic core of Mastek grew quarter on quarter, and as you say, layering in then the acquisition of Evosys, that's really bumped it up. I think it's worth saying we've only layered in 2 months of that acquisition of Evosys, so I think at the moment there's a lot of confidence in the organisation. I think the acquisition's going well. The market for cloud is obviously robust as we're all challenging with working from home. So I think we're seeing, although it's choppy in the market, we can see a clear route through. But cloud migration and also our core business with UK government, again, solid customer who pay their bills. I think we've got a nice platform to move through the COVID crisis and then build later in the year.
Hi John, good afternoon, or rather good evening to you. Margins have looked good. Can you split that between the acquired company and Mastek, and also what would be the COVID-19 impact, because I understand that Evosys has exposure to the Middle East?
Yeah, so I think on the margin profile, it has moved up because of the phasing, but if I look at our core margins held together between Q3 Q4 at about mid-13s, we're up at 17. I think we'll settle down to the mid-15s, 16s over the next sort of couple of quarters. We will, the margins will come under pressure because of COVID. I think to COVID, we've got some real resilience in the organisation, primarily through 4 things. One, we've got some good market fundamentals both in our UK public sector and, as you say, our Evosys cloud migration business. They're seeing good traction in the market. Others, traditionally the US market and other areas, are a little soft because of COVID. I think we've got an organisation that's probably more agile. So we moved within 3 weeks, we moved the whole organisation from work from an office to work from home, and we didn't see a drop in productivity, customer outcomes or velocity. So I'm pleased with that. And we have the financial strength to actually move this, to weather the storm and come out the other end in probably a stronger. So from a Mastek perspective, we think the impact of COVID will be shallower than many of our peers, and our recovery is intended to be faster.
Right, John, the street likes that. The street likes your numbers, and which is why we're seeing that big move on the stock price as well. If you could tell us a little about your core business, UK. Have things started improving out there? There was, the Brexit overhang as far as the business out there is concerned. And that 785 crore order book that you have, if you could split that up for us geographically.
Okay, so if I look at, as you say, we started the year with the Brexit overhang and we've ended it with the coronavirus overhang. So, those people that say, let you live in interesting times, it's certainly been an interesting year. But I think that's given us the fundamentals to really feel confident going through and navigating the coronavirus impact, because it is seismic on everybody. And I don't think any company is immune, and we can't isolate ourselves from that or insulate ourselves. But we can navigate our way through. So I think our UK public sector last year grew 12% year on year despite Brexit. Brexit was mainly softened the market in the private sector. And that's exactly the same with COVID. We see that very soft because, quite frankly, the economy has been shut in the UK for the last 3 months. It's only today we're starting to release lockdown for things like retail. So there's a natural impact on that, and we're in the supply chain. We've got to take our pain like everybody else. But I think we have a solid base in the public sector, and I think the US was soft. It got hit by retail. It got hit first of all by the coronavirus. That's soft, and we expect that to recover more in the second half of the year. And the Evasys business is solid. It's coming in, and I think because of people having to work from home, they're now looking at that cloud infrastructure to say, have I got a secure, robust, digitally integrated infrastructure that somebody else operates at a lower cost point? So I think, ironically, COVID could actually drive more traction in the cloud migration than we were seeing before. Regarding order book is solid, but I think what we've got to see is our customers are not making long-term commitments at the moment. So the duration of orders, the term of orders, is actually getting shorter. So we are living a little bit hand to mouth, but I do expect that order book to ramp up at the second half of the year.
Okay, so John, then for the full year, what are you expecting in terms of some guidance that you can give? I know that a comparison with the year gone by won't be possible because of your new acquisition, but there's an absolute number or an absolute growth figure that you can give us in terms of what you want to do this year.
I think I'd probably go, everybody, guidance is difficult. I think the market is very volatile. However, I think you're right, we are layering in the acquisition of Evasys. I think the business of Evasys is strong and robust. I think the vast majority of Mastek's core business is strong and robust. And certainly, remember, we've got customers that pay, certainly in the UK public, within 30 days. So our liquidity and our cash flow looks stronger than many of our peers. On a year-by-year basis, you're right, we expect to grow. We expect to continue to improve our earnings potential. So I think this is a year of consolidating the acquisition, managing the challenges of COVID. But as I said, we expect the impact on Mastek to be shallower than many of our competitors, and we expect to recover faster. And we think we'll start to see growth on a quarter-by-quarter basis in the second half. It's about maintaining it in the first half.
All right, John, thanks a lot for joining us and giving us that optimistic outlook, stopping short of giving a growth guidance because of the uncertain times, but telling us that they are relatively less impacted by COVID than their competitors. That's about Mastek, but let's shift focus then to answering all your stock and investment related questions.